and welcome to the show. Today we're going to be discussing the huge topic of share dealing platforms. Before we get started, just in the interest of full disclosure, nothing that we say today is financial advice, and we won't be recommending that you buy, sell or hold any specific investments. But we will be talking to our guest, Michael Vogiatzis. Michael, welcome to the show.
Thank you very much for inviting me.
You're a financial blogger, also go by the name of Foxy Monkey. Maybe you want to explain that.
I am a Foxy Monkey indeed. My profession is I'm a software engineer by day, but I love investing and I love personal finance, which is why I started blogging about it. Basically trying to help people save more money, earn more money and invest towards financial freedom, towards financial independence, which is my goal as well.
And you started investing recently or some time ago?
I have been investing 5 years now, and I like the fact that I'm an, let's say, early starter because of the compounding effect, what the benefits of investing are basically.
Okay, well we'll come back to compounding in a second. It's a fascinating topic. When you started out investing, obviously you discovered these things called share dealing platforms, share dealing services. How did you sort of navigate that world? Because there's lots of them about, they all kind of offer different things. What was your process for deciding who to work with?
It's a bit confusing for someone that is just starting out to just dive into the world of share dealing platforms, because there are so many. It's everything online. You don't know who to trust, who to believe, and all these different options. Basically, it's the same thing as selecting, let's say, your gas and electricity provider, right?
Sure.
It's something like that. And how I started basically by searching online, asking friends, the usual stuff. So there are some websites that can, let's say, filter out your options based on what type of investor you are, based on the amount of funds that you want to invest in, and the type of funds.
Okay.
There are ways to filter out and do a basic filtering in the beginning.
Let me take a step back before we get into some of the detail of that. What is your financial goal? How long are you looking to invest for, and what kinds of investments are interesting to you?
My financial goal is to basically keep investing, let's say, forever. But I understand this is not always possible, because there are certain goals that one needs to meet. Let's say I want to invest for my future marriage, or for my for my college, for the college of my kids. So it all depends on your goals. I want to invest up to a point that my investment returns will cover the cost of living, my cost of living, which is, in other words, called financial independence, and basically try to cover your living costs and achieving financial freedom. So you work only because you want to, not because you have to, let's say.
And you mentioned that when we were talking earlier about this idea of retirement not necessarily being at the age of 67 or 65 or whatever it is that something that you're trying to achieve too?
Yes, this is something that interests me, because if you keep investing and if you keep saving and basically not trading every month in and out, then you're certainly building a pot of wealth that keeps growing and growing. And if you start doing it early, or if you are, let's say, a high income earner later on and you still get in, then you can achieve it in a reasonable time, which is probably earlier than 65, 70 years old, which is contrary to the common belief.
Yes, of course. Okay, well, let's get into the details of share dealing platforms. What is a platform? Why do you need a platform, and what's the role that they play?
I think a platform is important because it allows you to access all those different funds, shares, bonds that are available to all investors. Basically each platform is different because they can provide different things. But it's important to have a platform, because usually what happened in the past is that the company allowed you to invest in the company funds on company shares. But nowadays with a platform you can have access to a variety of funds.
Right, I see. So in other words, it's a single kind of home for multiple different types of investment.
Exactly, a hub. Like, you log in there and you have, access. You have the ability to invest in different funds.
So they're allowing you to buy and sell, but they're also looking after the holding your investments for you?
Yeah, holding your investments, holding cash sometimes. Sometimes you just want to have cash in there, and instead of having it in the bank, it's another option. And usually a platform will sometimes aim to educate you as well.
Right. Okay.
So they can offer some research tools that allow you to filter funds based on your needs, whether you want to grow aggressively or you want to be more conservative based on how much risk you want to take, this sort of thing.
Okay, so there's the difference between sort of tools, the kind of filtering tools to help narrow down the range of investments, but also
Yes.
I noticed that some people provide like a blog post themselves or articles, videos, helping people to understand more about investments.
Yeah.
Has that been an important part of your sort of decision-making process?
It has been, yeah. Reading and other blog posts and articles about different investment platforms will definitely help you understand more about the platform before using it. And I'm sure you found it through your experience as well, right?
Yeah, so I have a couple of platforms that I use. Don't use, not sort of wedded to one for any particular reason, but tend to find that some offer more what I would call kind of content. They're sending me emails with articles about things that I might be interested in. Some of them have lists of investments, so like a top 10 list of funds or a top 10 list of investment trusts that are just interesting to know what other people are buying, what other people are investing in, which helps. And then one of the other platforms I use is a really kind of basic no frills kind of service, so it just gives me that ability to buy and sell and
DIY, maybe low cost,
without all of that kind of extra stuff that comes with it.
Yeah.
All of these services must come at a price, though, and there must be different charges for different things.
Of course, this is one of the criteria when selecting a platform, right? Fee is an important one because there are usually two ways of structuring the pricing. It's either flat fee, so you pay a fixed flat fee every month or every year or every time that you buy or sell, and there's a percentage-based fee. So based on how much investment capital you have, you pay a percentage of it to the platform. And obviously you have to do a little bit of math when you're starting to figure out what works best for you. But in general, you can tell that percentage fee is more costly the larger sum you have, and flat fees is more beneficial if you have a larger pot.
Sure. So once you get to a certain size, the flat fee kind of makes sense.
Yeah.
And some of them have caps, don't they? So if they charge a percentage, you won't pay more than a maximum fee.
Exactly, because they want your cash. They want users as well, right? So they make money out of it, and it is a profitable business for them as well.
Sure. One of the things that I noticed that differs when you look at charges is the different charges for different types of accounts. So when I've been looking, there are generally three types of accounts. There's an ISA, an individual savings account, a SIP, a self-invested personal pension, and then there's also this kind of general investment account or a share dealing account, some people call it. And the charges differ according to different products, is that right?
Yeah, I think this is because also platforms themselves, they want to target a specific group of people. So maybe they want to target pensioners, and so they structure the way in order to attract more pensioners. The advertising may be similar, and other platforms may want to target, let's say, people that are just starting out, and they want to people to start opening stocks and shares ISAs, cash ISAs, and this sort of, that's why I believe they have different structure. This is why I also have different account for my different share dealing platform for my stocks and shares ISA, and different for my SIP, which is a pension.
So you use two different
I use two different based on the benefits that each one gives me.
Right. And do some different providers offer different the range of investments is different with different providers, is that right?
Yeah. The range of investments differs from platform to platform, but usually you would expect that the biggest funds and that the shares will be the majority of them will be there in each platform. Some platforms I've noticed that they offer their own funds, right? So they're obviously trying to promote their own products, and sometimes they offer discounts for their own products, which makes sense.
Yeah, I see. One of the things that, just thinking about these things called investment trusts, which we're really keen on at Steps to Investing, one of the things I've noticed about a lot of the platforms is about reinvesting dividends. So investing in an investment trust, many investment trusts pay a dividend, pay income, and some of the platforms allow you to reinvest those dividends. Is that something that you do yourself, and what's important to look for when you're looking for a reinvestment service?
I think reinvesting your dividends makes sense because sometimes dividends you forget sometimes, right? So you have cash sitting in your account, and basically you want to automate your investments,
right.
which makes sense in the long term because you don't have to even think about it. Every time that a company or a fund pays dividends, then you reinvest those dividends automatically without having to do anything. I think it's important for platforms to have that, and some funds may also offer that as an option. Say that they are accumulation funds, as
so
opposed
kind of
to
automatically kind of
yeah,
happens.
exactly. Accumulation fund means that they will automatically reinvest your dividends without even your platform supporting it. So which is always a good option to have.
And you pay a charge for reinvestment usually?
Yes, you do pay a charge. I also don't like the foreign currency charges that I believe there is. So far I haven't seen a single company that is very competitive when it comes to foreign investments, because sometimes you want to buy a foreign share, foreign funds, and you want to invest your dividends in the same way.
Yeah.
And foreign currency is usually more expensive.
They charge another charge.
Yeah, there is another charge which is more than 1% usually.
And what about access to the platforms? I mean, mainly online, I guess, or can you ring people up and place a trade, or even write to people?
Yeah, I mean, maybe you can tell us from your experience in the past what used to happen and what happens now, because I only know what happens in the past four or 5 years, right?
Yeah,
sure. Usual platforms are online. It's quite easy to register. There is a bit of paperwork that needs to be done, but usually this is also done online.
Right.
But I'm sure this wasn't the case in the past, right?
Yeah, I think that's right. I mean, if you go back probably certainly 30 years, maybe even 20 years, people would write with a paper check and say, would you mind, if it's not too much trouble, buying some shares in such and such an investment company or in such and such an operating company at a time that you determine in the future, at a price that you determine, and then you can cash my check. Well, as you've kind of alluded to, the world has moved on a bit, and I think now people expect to be able to do things much more real time, and of course expect to do it online more than in the post, or maybe even over the telephone. I think actually people are doing much more for themselves online, and I think one of the other changes that's come with that, of course, is that now people are doing it on apps on their phones.
Yeah, you can do telephone as well, but usually I found that telephone is more expensive than the online, because there's another human being sitting there and having to execute the trade for you and so on.
And once I've invested with a platform, let's say I've bought some shares in an investment trust, what information do you get about that investment? Do you find anything out about it as a kind of matter of course, or do you need to log on to the website to look at it?
Do you mean like, are they notifying you whether certain things happen? Or?
Yeah, I mean, do you get like a statement to show your valuation of your account and that kind of thing?
Yeah. You usually get either monthly or quarterly. You get a statement which shows you what your balance is, what has happened in the past 3 months in your account, and the actual charges that you have paid.
Right. Okay.
Which is great because transparency helps everyone, helps the company, helps the investors understand better what they're doing with their money, and it usually arrives either in your post box or email.
Oh, by email, of course. And that's about the sort of the valuation of your pension or maybe your ISA.
Yes.
In terms of the underlying investments, the things that you've bought, do you get information about those? Do you get, say, the annual report perhaps, or things like that, or is that not so much?
I'm actually not sure. I can't remember to be honest. I'm sure you get an annual report of let's say, your investment in some platforms. But usually I find that the best way is to monitor the fund that you invest in and monitor some companies that you are investing in.
And my personal experience that I've got is more than one platform. It's okay to have more than one platform.
It's actually recommended, isn't it?
Right, yeah, of course, because ultimately you're spreading the risk of your investments being held by different people anyway.
Yes.
So if one of those companies was to go bust, which doesn't happen very often but has happened, then obviously your only risk is with that one company. If you have your investment spread as you have with more than one company, then you kind of mitigate that risk a little bit.
I have probably more platforms that I should have, but this is also because I want to review platforms. I want to write for the blog, for Foxy Monkey, and therefore I tend to sign up to different platforms as well as alternative investments as well, which there are different platforms there as well. But it's important what you said, that you need to spread your risk in order to be covered by the Financial Services Compensation Scheme.
Right, yeah.
Which is an independent organization that will pay you up to, I think, cover you up to £85,000 for if the company goes bust, basically. Which I think happened with banks as well. It's not only platforms, investment platforms.
Yeah, that's right. It covers more than just investment platforms. What about brand and service? How do you assess those things? So some of these companies, the share dealing platforms, are really well known, perhaps offered by big banks. Some less well known. Is that important?
Opinions contradict on this one, because I think that although it's important to know the brand, at the same time, this prevents new, let's say, startups that want to enter the space, and which could be, great platforms with great customer service, much quicker than some older platforms. So I think it's always important to do your own research. This is what boils down to. Because I think although it's important to know the names, at the same time, go on Trustpilot, search independently, and form your own opinion about which services you sign up to and are worth signing up to. That's my opinion, yeah.
Michael, thank you very much for that. We're just about running out of time for today's show, but before we go, perhaps if you could just give us your top 3 tips for what people should be thinking about when considering a share dealing platform.
Sure. The first one, the most important for me, is low fees. So a platform that will not charge you a lot for investing with them, because anything that you get charged will not come back to you as an investment return.
Yeah.
The second one would be to basically try to assess the quality of service. So it needs to be a quality platform, a good customer service. Go on live chat, check what other independent review websites say about this. And the third one it's a generic tip. It's just start, just do it, because as they say, 80% of the success is to just showing up. And I believe that there are a lot of people who go on analysis paralysis and they never do anything. But I think it's just important. Even if it's not the best platform for you, you can always switch. So yeah, third one is just do it.
That's great advice. Well, thank you very much for coming on the show and for sharing your thoughts with us.
Thank you for inviting me.
Thank you very much. Well, and thank you for watching. That brings us to the end of the show. Just to say, if you want more information, then don't hesitate in going to stepstoinvesting.com, but also check out the playlists on the YouTube channel. Okay, well, thanks for watching, and we'll see you again next time.